Let's bring in the Council of Economic Advisors Chairman Stephen Miran. Good to have you this morning, Mr. Miran.
Good morning. Thanks for having me.
You're welcome. You know, I'd love to get your take in terms of the likelihood at this point of sort of a slowdown, if not a recession. We speak to CEOs all day long, both on air, but more often off air when they're willing to actually share some confidences that they don't want to share publicly. And I certainly would say the last week or so, there's been a lot of concern. Do you think that the change in policy is going to mitigate the impact, perhaps, of a potential recession?
Look, you know, I never really thought that we were credibly heading for any sort of meaningful recession. And you guys yourselves, just a few minutes ago, mentioned Goldman did a pretty quick U-turn on their recession forecast. And I think lots of people have underestimated the fact that President Trump is a pro-growth president. He's a pro-healthy economy president, and he always has been. And so what's happened over the last few weeks is that financial markets are prone to excessive volatility, and that has always been the case. Nevertheless, that volatility itself can have really unfortunate economic knock-on effects, really unfortunate economic side effects. And so what the president and his team have done is to buy time to create very great trade deals that will be very intricate and do enormous things for the American economy and American workers, and to create time to make those trade deals. And we've got dozens and dozens of countries banging down the doors wanting to talk to us, wanting to create those trade deals.
Right. Don't mess with the bond market, perhaps, is one of the lessons that we learned over the last few days. Of course, many of us were aware of that previously. What are your expectations when it comes to these trade deals? You know, we sat here trying to understand what is the landscape really going to look like. Are, you know, American consumers and companies and everybody else importing say, all right, it's going to be a 10% across the board tariff. That's what we're going to live with. And basically nothing coming from China. Or do you think things are going to change dramatically over these next 90 days?
Look, the president has been pretty clear that what he wants is for other countries to remove their non-tariff barriers and their tariffs that prevent American exports from being as competitive. And so what I think we want is a situation in which American exports can go to the rest of the world and we can trade more with the rest of the world. And it'll be great for lowering the trade deficit. It'll be great for the American economy. It'll be great for American workers. And that's what we want. But you mentioned the bond market. And I think it's also important to understand that the bond market should be further, further happy that the inflation data came in so positively today. I mean, so tepidly today. The core inflation print, which is inflation, stripping out volatile things like food and energy. That core inflation print on an annual basis was the lowest core inflation print since March of 2021. So President Trump's policies are working at keeping inflation at bay, keeping inflation down, and between that and what's going on with trade, America's back.
Well, America never really left, sir. It's Jim Cramer. I know that the CPI was good today, but we know that there is a bump in prices coming. Notice I did not call it a tax because I'm not going to get into politics with you. But there is a bump in prices. We all know that. Won't that extend to the CPI just logically, empirically, and rigorously?
Look, today's CPI report wasn't just good. It was really great. So if you look at some items
about the future.
on it, yeah.
I love this number. This number was better than you think. I want to talk about the next number.
No, that's fine. I'll get to that in 1 second. I just want to say one thing about this number, which is that it's so good that if you look at prescription drug prices, they fell 2% in March. That's the biggest decline on record. Now, so this was not just a good number; it was a fantastic number. But if you want to talk about the future, we talk about the future too. And I think that it's important to understand that the cost of the tariffs is ultimately borne by countries that we're tariffing, and that's because we can reallocate our demand across borders, whereas countries that have factories sitting there, they can't move those factories. And so that means that the cost of the tariffs are borne by countries that we're tariffing. And so in the short run, can there be bumps? Can there be volatility? We saw the volatility in financial markets. That's absolutely the case. Can there be volatility in other prices too? Sure. But in the fullness of time, American consumers have the ability to shift their demand patterns across borders, whether that means bringing demand home to home producers or whether it means shifting demand from countries that treat us really poorly to countries that treat us really well. And the president's trade policy will accelerate that. And so the fact that we're flexible means that we'll avoid bearing the burden of the tariffs, and the countries that we're tariffing will bear that burden.
Well, let's talk about building a factory. Eli Lilly built the fastest factory I've ever seen. It's a North Carolina factory in Concord. It was supposed to take about 5 years typically. They did do it in 2.5 years, but they're a pretty well-run company. 2.5 years is record time, sir. What are we supposed to do in the interim?
What we're supposed to do is accelerate the deregulation process. And as I said before, the president has always been a pro-growth economy, and the president's pro-growth president. And he's determined to create a healthy economy and the strongest economy we've ever seen. So what we have to do is we have to get the regulations out of the way so that people can build those factories faster. It shouldn't take years to do environmental reviews before you build a factory. You should be able to break ground. And so what we need to do is to create a situation in which firms can really build those factories much faster. Coupling the deregulatory agenda with the president's approach on trade is exactly how we get to the new golden age.